Tyler here. Welcome back to the channel, guys. We are looking at this article that is suggesting CCIV could be the next big short squeeze, and I agree with this and I disagree with this, so I think you're gonna like my input into this video. As always, I'll be giving you my commentary and my take on this. Like I said, I agree and disagree, so you guys are gonna like this. If you get anything useful out of the video though, hit the like button, subscribe, and comment down below. I do appreciate every one of you guys that are subscribed. And those of you guys that are not subscribed, we love you guys as well. Now let's get into this article. If anyone did not know, I am a big time CCIV investor, so if I see an article that has short squeeze and CCIV in it in the same title, I am definitely going to read the article, and if there's any key points to bring to you guys, that's what I am going to do, regardless if they are good or bad. So that's what we are going to do in this video, and I'm going to be giving you guys a little bit of my commentary along the way and go over and sum it up at the end, as well as go over some technical analysis, and I'm going to show you guys the $2,000 trade that I made on CCIV and kind of give you guys a reasoning to why I did that. So let's get into it. At the current share, well, the title, I should probably start there. CCIV stock, could Lucid Motors be the next big short squeeze star? At their current price, shares of CCIV stock are down almost 70% from 52-week highs. Today, that decline is continuing ahead of the Lucid Motors SPAC merger, and some investors may be wondering why. They also may be wondering if CCIV stock could benefit from a future short squeeze rally. So I'm not going to read this whole thing. That decline is continuing today, with CCIV down about 6% in trading. It seems that a lack of clarity on the American jobs plan is hurting EV stocks as a whole, as investors are waiting for details about the long-term EV benefits. Also hurting matters is a new short report on QuantumScape. The report from Scorpion Capital says the QS is a pump and dump scheme, and even says it is worse than the infamous Theranos. Oh geez, those are big allocations. Those strong words appear to be shaking confidence in all EV stocks today, and CCIV is no different. Going on about the short squeeze. To start, where does CCIV stock short squeeze speculation come from? Well, according to the data from Yahoo Finance, more than 20% of the float is being sold short. Other sources estimate the short ratio is as high as 25%. More importantly, investors have caught on to the fact that Churchill Capital is one of the blank check companies with the highest short ratio. This means it is very appealing to some investors searching for a short squeeze candidate. And just so you guys know, GameStop, AMC, all these other companies, the weed stocks, all these companies that massively short squeezed, that is not normal. That is not going to happen. I'm not going to say ever again. That is not going to happen. That is a 1 in 10 year event. It so happens that we got like 25 companies that short squeeze a couple 100%. That it just does not happen. You don't get normally anywhere close to 100% or more short interest in a company. Anything over 10% has the chance to short squeeze. It is likely that it will go through a squeeze. Now, a normal squeeze is 10 to 15%. Now, once you start to get 20 to 25% of all shares being shorted, if you say half of those people, 1.25% of those hedge funds, whatever institutions, whoever's shorting it, actually buy back their stock and cover their short position, that is almost 15%, 12.5% of the total shares being bought. That will dramatically raise the share price. I'm talking 20 to 40%, 20 to 30%. We could go as high as 40%, depending, how many people are trying to sell at any given point during the squeeze. But nevertheless, 25% is insane, and that does call for, like I said, 20 to 30 to even 40% price action in the stock. These 100% multi-100% gainers, that's not normal, so don't get that twisted in your head. That is a false reality. So just had to get that out the way, because when people hear 20-25% short interest, they have not a clue what they're talking about, for one, but that is really, really high, guys. Like Microsoft or Apple might be at like 3 to 4%. Like that's why they don't short squeeze like that. But so yesterday's short squeeze had become very interesting to Wall Street. Since the GameStop short squeeze, investors have been searching for more opportunities. We have seen speculation around ChargePoint, an impressive rally in DISCB. Broadly, short squeeze on SPACs is also climbing. There is not really much else to point out in this article. They are just saying that because they have a high short interest and they are down about 70% and they obviously are being shorted a lot, this could lead to a short squeeze. And that is what I agree with. What I don't agree with is saying just because there's a high short interest that we will short squeeze. That is basically what they are implying in this article. Now, what will happen if we do short squeeze? We're going to need to get some news about them starting deliveries or doing something on the very positive side, because 20 to 25%, like I said, like I kind of rambled on earlier about, some of you guys might not understand this, but 20 to 25% of the shares sold short is a very high amount and will almost 100% lead to a short squeeze. Basically 100% lead to a short squeeze, but you need good information. If bad news keeps coming out, the stock will keep falling. It's not going to go up on bad news. So we need some really good news. I'm thinking if they give a day on their first deliveries or do something along those lines with actually delivering the vehicle, that will 100% lead to a short squeeze. Now, if you're expecting 100% short squeeze back to $60 a share or 50 or 40, that's not going to happen. I could see $20 where we currently are, $20 and some change, up to $30 a share. That is totally doable with a 20 to 25% short interest. Now, if you're expecting something crazy, that is just not going to happen. Have not been this low, guys, since January 27th. We were about $18.50. Now we are hovering right around our lowest points that we have been at, $20.41. Currently, we are at $20.44. Moved up a little bit in after hours, but nothing too special, up 32 cents, and that is really a lack of volume. So I do imagine that we will fall further from this, but it's hard to tell where, because if we look, we bottomed out $19.82, bounced back up to the mid $20 range, and kind of are chilling. I mean, it's pretty volatile right now. We're trying to find a bottom, and I mean, to even put a support level right here at $20 is what it looks like, but it's really, really hard to tell right now. But I can tell you that we don't want to fall under $20 a share. The valuation is way past justifiable at $20 a share, so people are buying it at $20. Why not? I mean, you really can't go wrong. But the first resistance level, I already see it at $21.75. That is where we topped out last time, and that is where we fell last time, just a couple days ago. Yesterday and after hours, we were in the $21.75 range, and yeah, we did fall 7.41% today, so we seriously gapped down. If I were to imagine, though, it's gonna be kind of a rocky road ahead. Might take a couple days to even get back to 21.50, so this is not one that I would expect to rip up or give you instantaneous gratification, because this is not the stock for that. This is a long-term buy and hold trade. Now, if we do short squeeze, that could be a different story, and we could get some very generous returns, but it's just very highly unlikely right now. So this is what I see as far as technical analysis. We are really just waiting for a bottom. The stock doesn't know what it wants to do. That's what I'm saying. We're waiting for a bottom. We hit it at $19.82 and then sharply bounced up from there, but you just never know right now pre-merger. A lot of people are waiting until the actual deal does go through to buy into it more, and that is totally reasonable. Now, let's take a look at the trade that I made, and this was a $2,000 trade. It's a cash secured put, so $2,000 cash collateral, so that has to be open in your account, and I chose a CCIV $20 put for March 14th, just because I don't think CCIV is going to close under $20 a share by May 14th. So that is the reason I chose to go with this one. And just to see, I collected $110 that I will end up keeping either way, whatever happens. And if I do get assigned, if you take $20 minus $1.10, you come out with an average cost on your shares, if I were to get assigned, of $18.90 per share. Now I'm down 72.73%. Nothing is new here. I'm basically down on all my options. So I'm down a considerable amount, but I'm not looking to trade this or swing trade this or buy it back. And that is what you do to close this position. It says buy to close right here or sell to open. So you would buy to close, and then you'd have to pay $191 in this case to buy back the contract and get out of it. Now, just to wrap everything up and kind of summarize where I stand on all of this, I think there's probably a 30 to 40% chance of a short squeeze coming. Given we have a 20 to 25% short interest ratio, that is really high. Anything over 10% makes you prone to a short squeeze. Now, it doesn't always happen like that. Some shorts probably just get out of their positions like you normally do, short high, buy low. That's the thesis behind shorting a stock, is basically the opposite of buying a stock. So I do think there is a small chance that we do short squeeze. The number one thing I would be looking for is some positive information. We're going to need a timeline or a date that deliveries will start and massive new ramp up in numbers, something to happen to get a short squeeze like that. Now, I do think positive information is coming, and that is what I will be looking out for. I will be looking to make a trade on this if we do start to see signs of a short squeeze coming, and there will be signs, and I will be sure to point them out on this channel. So if you want to stay up to date with that, make sure to hit the like button, comment down below, and subscribe to the channel. And if you really want to know before the next short squeeze happens, and beware, I did call out CCIV at $55 a share. I bought in at 17, called it out at $55 a share. It said it was too overbought, and 2 days later it dropped 45% in a single day. People came back commenting on that video like, you were right, Tyler, and I got so much hate for it. So check that video out if you guys want to. It is CCI danger with CCIV stock or something like that. I will timestamp it up here. You guys can go check that out for yourselves. Tons of hate on it. It's kind of hilarious. But anyways, we are on this. We are on CCIV, and I will let you guys know if any updates happen. With that being said, I am going to go ahead and get out of here. You guys take care. I will see you guys in the Discord and in the comment section down below. So check out the links in the description if you want to be a part of that. I will see you guys later. Peace out.